Good morning. This is Josh Hayes with Hedge Plus here with the market monitor for Thursday, December 11th. We're in the wake of the latest USDA supply and demand report. Um, Fairly inconsequential and neutral report as always. But the one big thing that it gave us was they did go ahead and significantly raise demand by 125 million bushels. They didn't touch usage. It brings us down to just over 2 billion in ending stocks for projection. Still a very lofty number, but this is before they've really done anything of any significance to yield. So that's came last year of big adjustment in January. We expect the same for this year. There's enough dryness, rust issues that we think 186 is just far too high number for yield. And if you do lower that significantly, it brings ending stocks into a much more palatable level. And you combine that with on-farm sales starting to slow down. We are in that period towards the end of the year where any sales that need to be made are made. Sales are made for all kinds of reasons, lack of storage, but also, especially right now, those sales are made for tax purposes. So what can be made to get you guys by without kicking into an undesirable tax bracket. So once that calms down, there's plenty of signs in the market that it's ready to take off. We keep holding 445 as an absolute floor. Every time we push up to 450, seems to be it's met with some sales. But we went through the exact same thing last year, and we fully expect to push past that soon. It came right around the third week of December last year. There's every indication we might be starting to push back it right now. And then obviously we expect to see a nice boost in January as well. As such, buybacks, those who maybe missed an opportunity earlier or want to initiate buybacks now, this is probably a really good time to do so. I know in my program Platinum, I'm looking at still buying March calls, and we'll probably put another recommendation out today for those who maybe haven't put anything on yet. Taking a look at the weather, big thing we're watching is obviously what's going on in South America. The shift here is that the rains have arrived in Brazil. That has helped alleviate some concerns there. In fact, any little bit of weather premium that might have been built into the soybean market, I'm sure that's part of the downturn we've seen recently, is these rains arriving in Brazil. However, Argentina, which started out plenty wet, going into planting, in fact, actually had some delays due to how wet it was there. It has gotten too dry there. It's been dry there for a while. It wasn't so much a concern because of the early rain they received, but they are now getting too dry, and that dryness is starting to shift to the north, so that it's going to be a concern for Brazil in January and Argentina in January. So they're not out of the woods yet. There still is some risk there. It's going to get too dry. It's something we're watching for, something the market is not pricing in at this time. But could start to price in soon, especially for Argentina. And if it stays dry there and it extends up to Brazil in January, it'll become an issue that affects prices come January there as well. International cash side, you can see corn. We are still obviously very competitive, best price corn. It's allowing us to make great sales. All these things happen in the background are going to show up in January. We've got a little bit of a taste of it here in December with demand being spiked, but you've also got ethanol that's booming. We didn't have a record week, an all-time record week this past report for ethanol, but it was still a very high number and enough of a number to stay on track with the USDA's lofty projection. So you've got corn used for ethanol. You've got record exports of corn, and overall, that's really cutting into what's going to be a massive crop. Soybeans, you can see things are tightening up a little bit there. We're getting closer to the price Argentina is offering, about $20 per metric ton above Brazil, but that number's been much wider in recent weeks. And you see in wheat, you still see the uphill battle we face there with lower priced wheat coming out of Russia, the Black Sea, and the Baltic region. Overall, definitely big thing to focus on right now, like I said, is sales on farm slowing down, coming to a stop, giving the market the chance. Another thing with soybeans is there's every bit of indication that China has started to ramp up its purchases again. So maybe we found our floor for beans. Given the window they have to make their purchases, they are obviously trying to time it for when the market comes down. Them jumping in here in the past couple of days is every indication that's about as low as they thought it would go. 1070 or 1080 range, 1085. So hopefully we've put a floor in there as well. That's all for this week. We'll talk to you again next week. Hope everybody's doing well and having a good December, and hope everyone will be able to get together and enjoy the holidays. Take care.